Good evening, everybody. Welcome to this evening's webinar hosted by Dental Elite's finance team. My name is Tommy, and I'm joined by my colleague Luke Shelton. We are both finance consultants here at Dental Elite Finance. In a nutshell, what that means is we assist purchasers or potential purchasers of dental practice, or working with yourselves to essentially afford or achieve the funding that's required with a dental practice sale. Obviously, there are many processes to how we kind of assist, and it's not just the end goal of obviously achieving the funding. There are many processes that take place before that, and that's ultimately the reason behind this evening's webinar, or certainly the topics behind this evening's webinar. We're going to kind of have half an hour or so just to discuss with you the buying process and the steps that kind of take place, or the foundations you need to put in place to obviously purchasing that dental practice. So we'll start with a little bit of housekeeping. Like I said, my name's Tommy and I'm joined by Luke. We're just going to kind of run through a few different topics back and forth. We're estimating that it could take us anywhere between 15 and 20 minutes to kind of get through some of the information that we have planned. And then we have kind of allowed a time slot at the end to go through any questions you may have. So if you do have any questions, just obviously either raise your hand or place them in the Q&A section, and then we'll allow some time at the end just to run through those questions as best we can. There will also be an email going out following this webinar. Now, this is the first webinar that's being trialed by Dental Elite Finance. So firstly, your feedback would be greatly appreciated. So obviously, we can improve these webinars going forward and ultimately continue to put these webinars on if they are of interest. Within that email, there will also be contact details for myself and Luke. So any questions that you want to discuss offline, we can do that then. So I guess the first topic that Luke's going to come to talk about is really the foundation and the first conversation that we would have with any prospective buyer. So I'll bring Luke in and let him take it away.
Yeah, thank you, Tommy. Good evening, everyone. So ultimately, I think probably a good place for us to start is that we know that everyone's going to be in a different sort of walk of life as such of where they are at the moment in their practice journey. Some of you may be just starting out thinking of buying a practice. Some of you may be actively looking. Some of you may be sort of already multi-site owners. That's absolutely fine. What we want to try and do this evening is give everyone just that little overview initially of the process for finance, how we can assist you, what the sort of step-by-step stages look like, and hopefully from there then obviously you'll have some information and some insights to leave with. Now, where I'm going to probably pick up on to start with is sort of we're going to try and walk through step by step in the process that we would take you through. Now, the first process that we will start with typically is we'll always have a phone call with you just to sort of touch base, obviously learn a bit more information about you, and following that what we like to do is send you over what we call an ALI form. Now, an ALI form is an asset liability income expenditure form, and ultimately what this form does is it allows to give us an overview of your asset background or asset profile against your age profile to start with. Now, that's something obviously the lenders will pick up on, and I'll explain a bit more in due course, but first and foremost, this form is one of the most probably critical components of the purchasing process. Now, this form effectively, when we're looking through the asset background, one thing I want to just get out there straight away is there is no right or wrong answer to this form. So if you put you don't own a property, you own multiple properties, you know, you've got a ton of cash savings, you haven't got any cash savings, we're not looking to flag anything. The banks aren't looking to flag anything. What we're using this form for us to start with is to look a bit more about you and sort of your asset profile, but also it allows us to initially try and establish a budget for you. Now, what we know, and Tommy will agree here, is what a lot of our clients tend to agree with us on is that establishing an initial budget helps lay a really good foundation for you, because to be honest with you, when you're just starting out, how do you know what you can afford? Are you underselling yourself? Are you overselling yourself? Are you looking a bit too far on sort of the thresholds that you probably could achieve funding for? And what we're going to do is we're ultimately going to go through the form. We're going to be able to see your asset profile, so the properties that you've got, the cash savings that you've got. And from there, then we can really put to you what sort of region or practice price region and goodwill we think is realistic for you. So when you start that search, then you know, okay, I'm looking at this practice. Luke or Tommy's told me, yes, this should be affordable for me. And you're not going to bring a practice to us where we say, unfortunately, this might be a bit of a stretch for you, or actually, it's a lot lower than probably what you could actually look for. So I think that's a really helpful tool that a lot of our clients like. Another thing that obviously is helpful for you is that with the AILI form, what we are able to do is we're able to just have a look over it and look at it with the bank size. We know the policies inside out. We know how the banks tick. So ultimately, what we're going to do for you is we're going to look at all the information you've provided. And if we think there are any discrepancies on there or flags that we need to iron out beforehand, it's a really helpful process to prevent that. So when we go to the banks, it's a clean slate and everything obviously is positive going forward then for you with terms. So that's a bit about what we use the AILI form for. Now, on the flip side of it, the reason that the lenders are going to want to look at that is, in fairness, they're going to want to see where you're at for your age profile, ultimately on do you own properties, how much cash savings do you have? But more, to be honest with you, they use that asset form for what's called debt serviceability, something that we will move on to a bit later in the webinar. Now, debt serviceability effectively is where we're looking at, on a worst case scenario basis, with a stress test that we would complete, how much do you need for your cost of living requirements? And then therefore, will that practice work for you and work for a loan requirement? Now, one probably key criteria me and Tommy see all the time, and this is probably one of the most frequently asked questions that we will pose to a client, is when the banks look over this form, if they're looking at your form and you're saying, okay, this is my monthly income, this is my monthly expenditure, this is my cash savings. If you're suggesting, let's say for argument's sake, you've got £5,000 a month disposable income, and you're saying to us, actually, I've got 20 grand in my savings at this moment in time, depending on how long, obviously, you've been earning that amount, one thing the banks will ask straight away is, well, if you're saying you've got £5,000 a month, why is there only £20,000 at the moment in cash savings? Is there a reason for that? Have you made an investment? Have you bought a property? Have you had an expensive wedding? There's a lot of different reasons that could be, but these are just the sort of questions that the banks will bring up. And that's one of the most frequent questions that we see sometimes, is that when the disposable income's quite high, cash savings are typically a bit lower than what we'd expect, and immediately the banks will flag that. Obviously, these are things that we like to go through beforehand with you. We'll be able to go through everything with a fine-tooth comb, and we can then just make sure that everything's in line before we make a bank approach. So it is a really helpful tool. So that sort of covers off initially the AILI form side, what we'll utilise that for, what the lenders are looking at. And obviously, I'll probably pass you back over to Tommy now, who will sort of go through a bit more of the market side with maybe the LTVs and interest rates and so forth.
Perfect, Luke. Thank you, mate. So yeah, Luke has alluded to obviously what we're going to discuss next. Now, ultimately, as a prospective buyer, now whether you, like I say, it's your first practice you're purchasing, or whether or not you own a couple of practices, multiple practices, wherever it may be, I'm sure you are aware, or will be aware, that there will be a input requirement from yourselves by the banks. What we mean by that is that 100% lending on goodwill is not something that we generally see in the market currently, and therefore there will be a cash input required from yourself. So that AILI form that Luke has spoken through is quite clearly really important. And ultimately, when we're discussing budget in the first stage, what we're looking at is the kind of cash savings that you've got available in the background to input into a deal as deposit. So to give an idea on the current market, now, depending on the type of practice you're buying, this will obviously vary. So it's another thing to think about when you're looking to purchase a practice. What type of practice are you looking for? Are you looking for a mixed practice, whether that be a fully NHS practice or a fully private practice? Now, the type of practice that you're looking for will certainly dictate from a funding point of view, what the bank's prepared to lend. So if we're looking as a general rule of thumb, you're a first-time buyer and you're looking at a mixed practice, it's certainly achievable with the major lenders in the market that you can achieve a 10% deposit from yourself and they will lend you 90%. Now, it was around about, or before 6 months or so ago, you were looking at, for fully private practices, from a deposit point of view, the banks would want an element of more money in the deal from you, and they were kind of sat at 80 loan to value for fully private practices, and that would obviously be a 20% input from yourself. So you can see kind of when we're giving you an idea of your budget, when we establish that budget for you, we will give you a number of caveats where we're saying, well, if this is the cash savings you've got, the type of practice value you can put, the type of practice you're looking at, the value can change. Now, in the current market, we are generally seeing now that some of the banks are more comfortable with lending 10% deposits on fully private practices. Obviously, it will come down to debt service calculations, but ultimately, when you're looking to buy a practice, that is how we're dictating your budget. Now, the things we've spoken about there are purely based on the goodwill for the business. So obviously, as you'll be aware, the practices will come to market either leasehold or with the freehold attached. Now, if there's a freehold attached to the sale, the banks would lend you 100% of the money for the freehold. So let's, from a figurative point of view, we'll look at it. If you have a business that's up for £500,000 for the goodwill, and there's £500,000 freehold attached to the site, there will only be an input, or should I say only, there will only be a deposit required on the goodwill side. So that would mean that for that deal, the minimum deposit requirement would be £50,000 from yourself, with the banks lending you 450,000 against the goodwill and 500,000 all of the freehold money. So your total lend would be 950k. So when you're looking at practices, if there is a freehold available, then obviously we can achieve 100% funding for you on that. In terms of that, when you're out looking at practices, so we're saying that it is achievable for 100% funding on freeholds. Now, that certainly does depend on the type of freehold you're buying. Most cases, what you're buying is a freehold where the full freehold use is for the dental practice. But we obviously do have scenarios whereby it might be a 2-floor freehold, and on the bottom floor you have a dental surgery. On the second floor, you may have a tenant who's basically is renting out the property. Now, in this scenario, it's slightly different. So the values, when we speak about 100 loan to value on the freehold, that is a portion to that freehold fully being occupied by the dental practice. In the scenario where there is a residential element to that freehold, the bank's policy slightly changes. They would want 30% input from yourself. So they're prepared to lend you 70 loan to value against the residential side, but they will lend you all the money for the commercial. So what we would normally do, if you come to us with a practice where there is that split, we would ask to get an idea of what the split looks like. But ultimately, excuse me, once it goes through bank valuation, we will understand the splits in a bit more detail, and obviously there will be some deposit required from yourself into the freehold side of the sale. So certainly worth thinking about when you're out viewing practices. It's something to look out for. If you're looking at accounts, in an ideal scenario, we would be looking at those accounts for you. But if you do get sent some accounts and you can see rental income as an income in the business, it's certainly a question you should be asking. And if you're out viewing the practices, we'd certainly recommend that, if you see a portion of that freehold property, that's being rented out, you need to kind of ask those questions to make sure, that you're not kind of outpricing yourself in terms of deposit required. From a goodwill and freehold point of view, the banks will lend you for 15-year money for the goodwill. So that's a maximum term length of 15 years for the goodwill. With the freehold, they will lend you it over a 25-year period. So Luke, in a moment, we'll speak about the financial due diligence process, another step in how we can help. And effectively, we are working out your loans based on that. Now, if you're buying the business leasehold, although the banks will lend you 15 years maximum for the goodwill, that is obviously subject to there being a 15-year lease in place when you take over. So another important question to raise is obviously, will there be a new 15-year lease in place for you as an incoming buyer? In the case that you're taking on an existing lease, the banks obviously will then maximum term for the loan will obviously coincide with that lease term. So what that means is if there's 10 years remaining on the lease, the banks will only lend you the money over 10 years. So obviously, your monthly repayments would be inflated. So again, another question to ask when you're purchasing a practice leasehold, just need to make sure you've got a 15-year lease in place when you take over. So there's certainly questions to ask. In terms of market insights, ultimately, when we're establishing the budget, that's what we're looking at. And that's kind of from yourself, when you're looking at your budget yourself, so you've got an idea of cash in mind you're looking to put into the deal, that's kind of the values you're looking at. The next stage in the process, really, once we've been through the asset form, we've given, given you your budget. It's kind of the fun part for you as buyers to go out and, look at the dental practice, find a practice you can see yourself working, or certainly something of interest. And the job that me and Luke are in as finance consultants, our job is really to work in the background and make sure that the practices you're viewing are financially viable. Are they going to work financially? And there is a process that we go through there, which you may be familiar with, something we call a stress test. What effectively we're talking about here is kind of a financial due diligence, making sure that the accounts are put through a thorough analysis. And Luke's going to pick up and just give you a bit more information on that.
Yeah, it's a great segue. Thanks, Tommy. So ultimately, obviously, the next step of the process after we've looked through the AD form, we've established the budget, we've obviously had a chat with you, and obviously throughout you're going to have questions. That's just standard. There is a minefield of a process when you're not dealing with it on every given day like we are. So ultimately, what we will then look to do is when you find a target practice, so we've established your budget, you've gone out and you've said, right, this practice looks really good. I'm going to go for a viewing on it. would you mind doing a financial analysis for us? Now, that's the next stage in the process of where we come in. So ultimately, as long as we've got the latest 3 years accounts of a practice and the sales particulars, so the sales prospectus, what we're going to do for you ultimately is, whereas you're typically given by any sales agent the sales prospectus, which obviously, as we all know, is there to sell the practice to you, what me and Tommy are actually looking to do ultimately is drill down into the actual cold hard figures of the accounts and see whether that practice is as financially viable as is suggested on the sales prospectus. Now, we of course want to make sure that you get your dream practice, and we know that, if you find that practice that you really, really want, you're going to want to get that more than anything, and that's what we're here to do to help you. But one thing we are is we are independent, we are FCA regulated, and we're here not to pull the wool over your eyes. If we do an analysis and we do things, think things are a bit tight, or we don't think it's quite viable for you, obviously we're acting in your best interest, so we of course would let you know. But on the flip side of that, majority of the time when we do an analysis, it will work and we'll find a way to structure it that's most beneficial for you to get the most competitive terms. Now, going on to the actual stress test itself. Now, a stress test or financial analysis that we complete is ultimately, we will put the 3 years accounts or latest 3 years accounts side by side into a formulated spreadsheet. What we'll then look to do is ultimately assess the percentage of turnover of each expense year on year. What we're looking for there initially is, are there any red flags within those accounts? So for argument's sake, I remember a practice I was dealing with the other week where stationery had ultimately been £2,000 in 2023, £2,000 in 2024, and then all of a sudden it was £25,000, obviously in 2025 year-end accounts. So it's a case of, we go, okay, what's happened there? Either they've been buying some really expensive pens and pencils, or alternatively, there's something in that we need to dig into. And ultimately, when we actually raised the query, it was straightforward. The accountant had unfortunately put something else into there which they shouldn't have done. They've explained what they've put in there. We've been able to add those relevant fees back because it is a possible add back for us. From there, then we've normalized the costs, and obviously that's helped with serviceability. So first things first, it's analyzing the trends, going over the 3 years, making sure there aren't any huge discrepancies across turnover. Have they inflated maybe the most recent year's turnover to get a better valuation? Either way, that's not going to fly if that ever was the case, because obviously we'd pick up on that and we'd need to see, and the banks would want to see as well, that the next year's accounts are actually in line with that turnover increase. But what we're trying to do for you is just pick out anything we think needs querying before you go ahead. Now, to be honest with you, 9 times out of 10, most sets of accounts will be standard. Everything should be fine in there. We wouldn't expect to see anything horrendous that we're not expecting to be able to get finance for. But there is always the odd practice that will just have a couple of queries that we will just need to go through and make sure we raise beforehand. Now, once we've gone through the latest 3 years figures and we've analysed those trends, if everything looks okay, or even if there are a couple of queries that we've highlighted, that's fine, we can deal with those. What we're actually looking to do is we're looking to mirror the bank's model. Now, the way that the banks work, unfortunately, probably the most sort of frustrating part about working with the several major lenders is that they will not factor in any projections or predictions of what you're looking to do in that business whatsoever. So ultimately, what they're going to do is they're just going to look at what's in the black and white figures of the latest 3 years accounts. And what they also then do is stress at really a silly high interest rate that we would achieve much better than for you. But what ultimately they're trying to do is, if they're stressing at a much higher interest rate and not factoring any projections or predictions of what you will bring to the business, if it's just running the way it currently is with you in there, ultimately what they're trying to do is say, well, okay, even on a worst case basis, if we don't factor anything else in, is there still enough in the bottom line after you've paid your loan repayments, your tax, and your loan interest for you to take a comfortable salary to cover your cost of living or go towards your cost of living and lifestyle requirements? Now, if we can evidence that, and if the banks are happy with that, then of course we're going to be able to get a loan for you. And ultimately, that serviceability check is really, going back to what Tommy mentioned about loan to value percentages, is what hinges on what we can achieve for you. Now, the lenders, as Tommy mentioned rightly, were very strict previously on normally for a fully private practice, they wanted 80% loan to value, they wanted 20% in. But in honesty of recent, probably over the last 12 months, they've really relaxed. If we can get a really strong bit of serviceability shown in the initial analysis, they can actually get to 90% loan to value typically on goodwill for a fully private practice. So again, that's not something you need to worry about. That's something for us to deal with and to try and get you those best terms. But again, it all comes down to that serviceability threshold and what we're looking at. Now, ultimately, if we just quickly flip back to the AILI form that I mentioned at the start, and I mentioned your monthly outgoings, that's why the AILI form is crucial, because what we're going to do is we're going to be tying all these things together. We're looking at your monthly expenditure. We'll annualize that over 12 months. And let's say, for argument's sake, you need £25,000 a year to cover your cost of living requirements, or your bills, the necessary bits and bobs that you need. If we then do a stress test on a worst case scenario and a practice is shown that there's a minimum 40 to 50,000 salary in there, the bank are going to be happy that there's plenty of money left in there on a worst case basis. Obviously, we then know when you factor in your new revenue streams, if there's growth potential in the private, whatever that may be, and obviously then you've got a much more competitive interest rate. We know that there's going to be a lot more fat in there, a lot more money in your back pocket. That's what the lenders are looking at, and there's going to be a lot more comfort there. So that's why this stress test is so important, is that's how we evidence to the bank, yes, we're comfortable, yes, there's plenty of money left in this practice, and let's get this loan moving forward for you. So, like I say, we're not limited, and this is another major point for us to say here, actually, and Tommy will obviously pick up on this most likely as well. We are not limited to Dental Elite practices. So just because it's marketed with Dental Elite or it's marketed with an external competitor, that doesn't matter at all. As long as we've got 3 years accounts in the sales prospectus, we can work on absolutely anything for you. And I think that's key, because one of the major reasons that we have so many clients using us for external practices as well as internal practices is the main benefit of using DE Finances, as you may have seen advertised, or you may have seen even if you've had a conversation with us at any point, is we don't charge any fees for our services. So ultimately, we will just simply get remunerated by the tier one major lenders that we're partnered with. And that's less stress for you and a less of a headache when you've got your solicitor costs and everything else in the process to think about as well. And it's just a way of us effectively saying, look, there's no need for us to be greedy. We don't need to be charging you extra fees as well as taking remuneration from the bank, as we know a lot of external competitors may or may not do. But ultimately, what we want to do is build that relationship and the trust, work with you moving forward, and make sure you get the very best deal, as that's what's most important here. So obviously the stress test side, like I say, to recap really briefly, is we look across the latest 3 years, look at the trends in the accounts, look at the percentage of turnover. Have there been any major discrepancies in there that we need to flag? And obviously moving forward from there, we'll then do obviously the financial analysis after your EBITDA add backs and adjustments to see what we've got left in after repayments, interest and your tax. Providing we've got enough to cover your cost of living requirements, we can then be confident we can go to the banks and get you some really good terms like we are doing. So obviously that's the stress test side. I'll now pass you over to Tommy, who I think is going to pick up, if I'm right, Tommy, on the tender application side. So after we've done the stress test, where we then approach the banks and obviously how that process works for you.
Perfectly. Yeah, that's exactly right, mate. So I guess the closing topic is something where I guess most clients, when we have a first conversation, thinks that this is how we can help, or certainly where we first step in and help. Obviously, as you can tell, there's a lot of foundations that are put in place before we get to the stage. But ultimately, this is the exciting stage for you. Generally, this stage will happen once all of the first steps have been kind of conducted. We're through that time frame. You found a practice you like, and what that means is you've had an offer accepted on the practice. So the next stage in how we help then is by sending a funding application across to our lending panel. So this is ultimately where you're getting an idea of your funding options out in the market, or certainly your solid funding offers in the market from the lenders. Now, what we would do is all the information that we've spoken about, so your asset form, as Luke mentioned, the stress test on the practice we found, they form as part of this bank application, along with a bio or a bit of a description of you as an individual, as a partnership, whoever you're looking to buy. So ultimately, the first stage, as well as there are facts and figures, it's a lot about relationship building to get to a stage where we obviously then put together a funding application for you as if you've written it yourself. So we try and collate as much information as possible to go with the facts and figures. Now, that funding application will obviously then get packaged up and we send it on to the eight high healthcare lenders that we have on our lending panel. Now, these will be household names that you'll be well aware of, banks such as Barclays, Lloyds, HSB, etc. The key there is that we, on our lending panel, have 8 banks. So in one email, one application, we will fire it off, to 8 different lenders. Now, I guess from your point of view, the title of this webinar was Why to Buy a Practice with a Specialist Broker. In a nutshell, what we're effectively doing at this stage is saving you time and effort. So if you to go around those 8 banks yourself, that obviously would be fairly time consuming. We're doing it in one-stop shop. We give the banks 48 hours response time. So within 48 hours of sending their application, we give them a cut-off of 48 hours, and then we have the offers all back together, collated in a PDF format document to obviously then present to you. So we're going to look to try and save you as much time. And from a point of view of saving money, we have contacts at these healthcare lenders at business development manager level. In essence, what that means is that if you were to reach out to these banks yourself, be kind of appointed a relationship manager, whereas we are one step kind of above that as the leading broker out in the market. And what we're doing is we effectively means that we can obviously achieve greater pricing parameters. So generally what we're kind of seeing with those banks is interest rates of around 2% to 2.5% above the Bank of England base rate currently. Obviously, we are approaching on variable rates at this stage, and fixed terms can be offered later down the line. But those kind of offers that we're talking about are based on variable rates in the current market. What we then do, obviously, like I say, we'll present those offers to you, and obviously our relationship maintains throughout the process. We'll obviously discuss those offers with you. Some of those banks may have special conditions. Their offers may be subject to conditions, and we'll discuss them with you in a bit more detail. And that's your kind of question to ask as many or your point to ask as many questions on the said bank before you obviously go and make your decision. So our role at that point there is to kind of manage that process for you before obviously selecting a bank and then handing over to that said bank. Depending on the bank, it comes at different times, but that's obviously when we'll hand it over. Now, obviously that is a process that takes place, and that's kind of the key word from this evening, I guess, is the process that takes place with a broker. We will remain within that process throughout the time frame. So even once we've handed you over to the bank, we will remain in the loop all the way up to completion, managing that sale for you. And as Luke has mentioned, we do have an agreement with the banks, obviously, with the fact that we're introducing so much business to the banks. We have an introducer fee agreement with them, which means that in most cases, the banks will be paying our fee directly. So in essence, everything we've spoken about this evening to you as a buyer will come at no cost. So that is also something to think about.
Yeah, so thank you everyone for giving up your time this evening. We really do appreciate it. We've got a few more of these that we're going to be hopefully doing over the coming months. So please keep an eye out for those, and anyone else that you think might be interested, let them know. And hopefully we'll hear from you all soon, and we'll be in touch. So all the best and have a lovely evening. Thank you.
Thank you. Bye-bye.